Hey everyone, it's Imran back from Options Insight. So I have got a big announcement to make. So, I've been trading crypto options since 2020. It's been a developing market. We've seen a lot of players enter the space in crypto. We've seen the ETF launches, a lot of TradFi guys coming in, trying to develop structured products, all these different offerings that they're trying to put together. And you may remember a few years back, before the FTX scandal, there was something called DOVs, DeFi Option Vaults. Unfortunately, because of all the stuff that went on in crypto that year, a lot of those went pop and haven't really managed to recover. But that doesn't mean there's not a demand there for these type of systematic option strategies in crypto that kind of help you either protect your crypto and manage those big drawdowns, or grow your crypto over time through yield enhancing trades that take advantage of relatively expensive volatility in crypto. So that is what we're talking about. I am launching something that I'm calling Options Insight Crypto Vaults. It's not like I'm saying, give me your crypto and I'll custody it and grow it for you. This is an education service. This is me starting to manage my crypto in more systematic ways and educate the masses while I do it. So that's what these Option Insight Crypto Vaults are all about. They are trades that I'm doing with my own crypto, and I'm going to teach you how to do with your crypto. I don't want to touch your crypto. That is for you to look after. But what I will do is show you how to protect it when we've had a big run up clearly since last year. And if you were looking to protect a certain percentage of your crypto, how would you go about doing it in a sensible, systematic way? That is what we are doing over here at Options Insight. It's a product that's been lingering in my mind for a while, but finally we've launched it. I'm super excited about it. In this video, I'm going to go through each vault, explaining the purpose, what it's called, and what we plan to do. So Vault 1 is called Hedged Crypto. And it's pretty self-explanatory what that is doing. The idea is you're going to park some crypto that you want to hedge, right? I wouldn't suggest doing all of your crypto in there. It depends how bearish you might be on crypto. But if you're that bearish, you might end up wanting to sell your crypto, okay? But let's assume that there's a certain amount of your crypto that you want to hedge, that you're slightly concerned the market could have a drawdown, and you don't want to have that massive drawdown on your entire stack of crypto, basically. The point of the Hedged Crypto Vault is I'm going to park a certain amount of my Bitcoin in that vault, and I'm going to do systematic strategies around that are protection trades. So whether it's puts, put spreads, risk reversals, put spread collars, these are the typical types of hedging strategies that institutions use to hedge their long exposure. Very commonly done in TradFi, and I'm going to do it in crypto, and I'll teach you how I'm doing it, why I'm doing it, and how I'm managing those positions over time. The idea is this is a perfect vault for those who want to control their risk, mitigate some downside risk, but stay in the game. That is what we're trying to achieve. If crypto goes parabolic and goes to 500K Bitcoin in a straight line, you're going to underperform had you just sat there with no hedge. You can't avoid that. But the beauty of crypto is that a lot of the time, upside calls trade at a premium to downside puts. And so we can actually put on quite advantageous trades that give us plenty of upside still for the next few months, but actually give us some quite helpful downside protection if the market was to have a drawdown. So that's the point of Vault 1, Hedged Crypto. So Crypto Vault 2 is the wheel, or the crypto wheel. Now you could do this on Bitcoin or Ethereum. That's where the liquidity is in options. Personally, I'm going to choose to do it on Ethereum because it's a higher vol asset. It really takes advantage of expensive vol. What is the wheel strategy? Some of you may be familiar with it. It's basically a yield earning strategy that you can employ in options where you own an asset, you sell covered calls against that asset, so you earn some income against it. If at some point the market rips higher quickly, you're going to get taken out of your exposure. That's what covered calls are. If you get taken out of your exposure, you will now be sitting on a pot of cash that you can then start selling puts against. When the market has a drop back down again, you're going to get delivered back your crypto via the fact that you sold puts. So the idea is we're always selling optionality on the top side or the downside, depending on what has happened to our position. If we've been taken short or not short, if we've just been taken flat, or whether we are sitting running long. So it is a crypto native strategy in that, if crypto halves, it's not going to protect you from that, right? So it's not the same as Vault One, which is Hedged Crypto. The idea of the wheel is that the wheel is an income generating strategy that is natively long crypto, but is just trying to nick some income around the volatility and selling expensive options, basically. That's the idea of this strategy. The crypto wheel, it's a nice, easy, systematic strategy to run, pretty low maintenance. And I'm going to teach you how to do that. I will be doing that with some portion of my holdings in Ethereum. And then the last vault we're going to do is called crypto income. It's not too dissimilar to the idea that we're trying to generate yield, generate income out of selling volatility, but we're not doing it against our holdings this time. The idea with this one is to park some Bitcoin and Ethereum into this vault and use that as margin to generate income through selling iron condors on a weekly basis. Anytime you sell vol, anytime you sell gamma, there is risk associated with that. You don't want markets to be too volatile because you can lose money. So it's not as if this is a free money machine. You are taking on risk, but the idea is that if we believe we're in market environments where implied vol is expensive and realized vol is going to come in lower than that, then systematically doing these weekly structures where we sell premium should be a profitable strategy. If you know how to manage your risk in real time, when you've got these iron condors on and the strikes get tested because the market actually does have a big move, then you can manage that risk and roll out your positions to stay in the game and reduce some of your risk. And that's the type of stuff I'll be doing. So I'm going to be doing that for myself. Again, in Vault 3, crypto income, I'm going to be doing regular iron condors. I'm going to risk manage them in real time. And as members of the Alpha Pod, I'm going to be showing you guys how I'm doing it, why I'm doing it, and we're going to be managing that risk, and we're going to be trying to generate that crypto income over time. Again, it's a native crypto strategy. Therefore, if crypto halves, it's going to take it on the chin. But the idea is we're trying to incrementally increase the amount of crypto that we have every week. We're going to chip away to try and grow the pot. So that's the idea of crypto income. I think it's a very sensible strategy. It's got limited risk exposure because we are going to use iron condors. We're not just going to sell naked risk so that we can get liquidated and blown up. That is not at all what we're about here. Options Insight, we like to keep everyone safe who we are teaching about options. We're going to teach you to do this the right way, the sensible way, and always managing your risk. All right, guys, that is it. That's the last vault. I hope you guys are as excited as I am about this. This is big for us. Crypto option vaults are now available as part of the Alpha Pod. Go and check it out at options-insight.com to learn more. Thanks.